So I'll do the honors for customs. Then my colleague Elena will take over on the areas of domestic taxes. And the director for Diaspora will recognize your presence and thank you for your support. Now, yes, I can see the numbers going up. Thank you very much, and I will walk you through. First of all, let me unwrap customs, and what we do is we do revenue collection. Normally, we don't start with the revenue collection. We normally start with trade facilitation, but I assure you, at the back office, it is about revenue collection. Then other things follow. But of course, trade facilitation is very, very close by. We also protect the society against importation of harmful things like things like weapons. We do that in conjunction with other agencies, security agencies. We also do enforcement of those things which are prohibited. We don't allow them in. Those which are restricted, we ensure that you have the relevant permits for you to bring in such things. Then, very, very important, trade facilitation, the trade statistics. So we provide the figures and facts to the government to be able to do decisions depending on what is imported from where. Customs collects and accounts for the following taxes: import duty. Right now we have 4 BATs, almost 5. We have the 0, 10, 25. Then we have the sensitive list, with some of the items going for 50%, 70%. We also do import levies at the fees, for example, IDF, the RDL, also known as the infrastructure levy. Okay. We also have a small component at export levy, but very, very small one. Recently, we introduced an adulteration levy, which is also bringing some money in. We have VAT, which we administer in conjunction with our sister department, Domestic Tax Department. Excise duty too, we administer with our sister department. Next. Concerning the various procedures, in principle, Customs administers the East Africa Community Customs Management Act. This is the community is made up of 6 countries, and currently DRC is knocking on our doors. They want to join in. At some point, Somalia was also knocking. I'm not sure which Somali. Then the other issue is the payment of the customs revenues is based on the self-assessment. So we normally encourage you. The first step is you do self-assessment, but of course after you do that, we take over and see whether you have done the right thing. You do the appointment of a clearing agent to help you out, and that is purely a private arrangement between you and the clearing agent. But of course, we are interested parties. We ensure that we register them, and in case of any problems, we come in. In case you have any problems with these people, despite the fact that it is private. And we do encourage you to refer to the necessary sources of information so that you use honest clearing agents. Like any other industry, you may get some dishonest. I'm saying this because at times we get serious complaints from diaspora people where they approach clearing agent, then the person disappears. If you want to bring in your vehicle, it disappears with your money and leaves your vehicle. And to some extent, now we have a lot of muscles, and we are able to follow up for you on some of these bad people. We also have a program, AEO I would like to actually encourage you, as you are profiling the clearing agent you want to use, ask this one question: is the person an AU? Okay, AU is the equivalent of the K2 Premier World. So the people we have vetted, those firms we have vetted, both clearing agents, transporters, even some importers, some consolidators, after vetting them and finding they are clean, they are good, we put them in that privileged club, and their goods move a bit faster. And we don't do a lot of this, of course, saving them quite a number of costs. For example, we don't do physical verification. For such people, privileged people, we generally do non-intrusive. Okay, so please note that point. And the list of the AUs is available at any time if you are interested. We also have the list of the clearing agents and they have an organization, so that you don't go to somebody only to find the person is not even in that organization. The organization is called the KIFWA. Okay, and right now KIFWA is doing very well, and they actually supporting the clients and any people who are anybody who have any problem in that area. They have a very strong secretariat. So by law, the agent is the principal agent of the importer. So we treat this clearing agent as your agent, but of course you remain the principal. The agent accesses the custom system. That is why you need this person, because they are conversant in our systems. So for you, you may not be able to access the KRI systems. They are quite a bit complex. In fact, we train these clearing agents for them to be able to know our processes, the laws, and all that. Customs declarations are supported by the relevant import-export documents. This is also very important, because remember, this agent relies on you. It is you to give genuine and proper documents. If it's an invoice, if it's something you have bought new, give the genuine invoice, because at the end of the day, we have the capability and skills of detecting bad documents. Okay, and I assure you, if this is some of the areas source of fear, I assure you, when we catch up with anybody trying to use maybe forged documents, we are normally we don't show mercy at all. We don't. So maybe this is one of the areas where we might be feared a bit. So the agent, after you give them all the necessary documents and information, they do the declaration for you. And now we are able to progress your area. Next, please. Now, goods on arrival must be entered. I think we have touched this a bit. This is also actually in the law. And important, again, this is a source of extra costs. Goods need to be entered before 21 days. After 21 days, your goods start incurring customs warehouse rent, okay, plus other myriad expenses, even from the cargo handler and others. So it's very important that, again, get hire a very competent clearing agent, so that they remove your goods like 3-4 days, because we are that efficient. We are 99% paperless, making your work very, very easy. Most of the transactions are done from your desk, where you sit at our desk, as opposed to 5-10 years ago. So with a competent clearing agent, you are able to clear your goods fast enough, so that you don't incur demurrage, you don't incur customs warehouse rent, and a lot of other storage charges and other handling charges because of the delays. Okay, and also the risk of your goods being out there. For example, if they're in Kiribini, in the heat, some of those goods can be affected by the heat, by the weather. So where goods are not removed by the stipulated time, they are deemed to be in the customs warehouse, and indeed we charge rent. Okay, and the rent is just at US dollars 3 0.3 per cubic centimeter. This is in the regulation. So we look at the container. We have a way of measuring the container, and we charge you, and we charge in dollars, not in local currency. Indeed, even the other cargo handling agencies, they charge in dollars. Importers should be aware that non-compliance with laws with regard to importation and exportation, even if it is your agent, we will actually treat it as an offense and actually fine you. Okay? Then offenses and penalties vary for the different commissions or omissions, and all this is governed by the law. Okay? Next, please. Now, taxes, for example, import duty, VAT, and such, all these are guided by the common external tariff. Right now, we are using 2017, which is expiring this year. At the July next year, we will be having edition 2022. So, those goods which are vatable, the VAT starts at 16%. Those which are excisable, it varies. 10, so they are 10%, 20%. We also have the other fees like IDF, 3.5. We have RDL, 2% of the customs value. Okay. Shipping lines also have their own charges. Clearing agent, of course, he or she will charge you for handling, doing the clearing for him. We have the port charges. Okay. So it is important for you to be aware of all these things. And all this information is available. For KRI, our charges are available. KPA, the charges are also available, or KPA or equivalent KAA if it is by air. Now, treatment of donations. For us, we treat this like any other goods. Okay? Unless in certain circumstances where you get remissions from the National Treasury. We also have the 5th schedule in the Act, which has a raft of items which are duty-free. Okay? But there are others by tariff which are duty-free, like medicine and medicaments. Okay? But for this, you need a permit from the Poisons Board. There's a lot of information. Like a director was saying, it is important for packaging all this information because it's quite a lot. It's quite a lot. Next, please. Some of the agencies involved, we have, of course, KRI, we have KEPS, we have Port Health, we have KFIS, that is plant, we have police, we have anti-counterfeit, quite a number. But we have made an effort and reduced the agencies at the release points, at cabinet level, only for have a presence in the port. There's a time we had a whopping 16. Sometimes you get like over 20 agencies and you have to go through each one of them. So right now, I would want to go on record that we only have 4 agencies. The others work in the back office. Okay? And the various agencies come in depending on the kind of consignment. For example, we have said this to do with medicine and medicaments, a Poisons Board come on board. Okay? Customs fronts most of these agencies. Okay? And where everything is in order, customs releases the goods. Okay? But where we have issues, we refer them to the back office, to the various agencies. So it is important that your agent from the word go ensures that compliance, he observes compliance from the word go. Otherwise, it is too costly to be caught non-complying. Next, please. Now, let me touch a bit on the tax incentives and the customs laws. But of course, you need to delve. I will just trigger your mind. You need to delve deeper. So, The East Africa Community Customs Act is applicable, like I have said. So we have the tariffs, by tariff where goods are actually zero rated, okay, or those which are 10%, others 25%, others attracting higher duties at a sensitive list. Now, for the most of the machineries under Chapter 84 and 85, they are actually duty free. Though some of them, the National Treasury have actually imposed the VAT. Okay, but for duty, they're actually zero. Chapter 84 and 85, most of the machineries, not the fast moving items, the electricals and the others. Just I'm talking of machineries and the equipment and the plants. Then for IDF and RDL, the infrastructure levy, we have identified manufacturers and we charge a lower rate, that is at 1.5. Everybody else pays higher at the 3.5 and the 2% respectively. Industrial parts for spares, most of them are zero duty. Okay. Solar and geothermal equipment, we are going out of our way to ensure that these are zero rated. We have other items, okay, like medical equipment, medicaments, especially like during the time of COVID, we were facilitating some of these, of course, in tandem with the National Treasury and the Parliament. Goods for the disabled, okay, duty free. Returning residents have a raft of items which are duty free. Next. Now, let me touch on this. This is really in your area. We refer to a returning resident as a person changing resident from a place outside Kenya to a place within Kenya. And for this reason, you, diaspora, returning home would qualify as a returning resident by definition. And items exempted by the law when imported by a returning resident, of course, subject to verification by our officers at the release points, wearing apparel, zile nguo uko unavaa hizo huwa tunashukulia hilo, hizo ni zako, hakuna mambo ya biashara. But what happens if instead of a dozen shirts I have 200? Ambassador, what happens? Are those still Ambassador Richard, are they still for personal wear? Or you would want to say that your style is you have hundreds of shirts of them. Okay, so we look at the reasonable. What does a normal person in normal circumstances use? Okay, so that is what we do, and we are normally very lenient and we're very supportive. Personal and household defects, yes. Of course, even using my IROC, these are things you have been using. Of course, if you buy 2, 3, 4, 5, 6 fridges, I will question you. Because generally, maybe 1, 2, if they're going beyond that, maybe those are gifts you are bringing to your family members, and we treat them as imports. Spirits, including liquors, wine, perfume, cigarettes. We look at the quantities. If you are a smoker, we look at the quantities and they are prescribed. Beyond that, we charge you duty. So be as open as possible when you arrive. We want to make you arrive easy at JKIA. I know you arrive early in the morning, you are tired. Our officers questioning you a lot, but we have to implement the law. But it's good to take time and go through these things on your own, so that by the time you are coming, you know. By the way, we find even people who are so compliant. They will tell us, yes, I have my bottles of whiskeys, these 2, but I have an extra 5, so I'm ready to pay taxes, assess taxes for me. And where you don't put the officer to an effort of trying to explain the law to you, you already have looked at the law and you know you are supposed to pay. Look at the issue of the personal vehicle. It is very logical that you have been driving a personal car. You are coming with it, we do not charge you anything. But of course, if it's a bus, now that is trade. If it's a minibus, that is for trade. And we will treat it as import and subject it to duties. Next, please. So, conditions for exemptions. The rule exempts these goods provided conditions to be fulfilled, which include that goods shall be the property of and accompany the passenger. Further provision given where goods cannot literally accompany the passenger. For instance, in the case of a motor vehicle, we allow 3 months. So you can come, you are coming back home, you put your things in a container, we feel 3 months are enough. If you are coming from London, you can put your goods there, and you arrive here, within 3 months, your goods should also be here. And we will treat them as your personal property, your personal effects. Okay? Other requirements, the import duty-free allowance shall be granted only to passengers who have attained the age of 18, of course. True. Customs shall verify supporting documents. Where we need to look at any documents, please comply with us, cooperate with us, passport, alien ID, work permits, because they show us how long have you been out there, what have you been doing. Okay? Original valid passport is used for the last 2 years, or any previous passport other than the current one. So we ask for that. We want that historical information. We are not harassing you. The personal effects must be imported within 3 months. That is what I have just said. A person shall not be accorded an exemption on another motor vehicle, which subsequently is imported within a period of 4 years. Okay, so when you come with a vehicle, there's a period of 4 years you will enjoy. Okay, at the end of 4 years, listen to this carefully. At the end of the 4 years, you can dispose that vehicle. You can sell it to a third party, but the third party will not enjoy the privilege. He or she will pay taxes at the age of that vehicle. And now, if again you are returning, you can qualify for another vehicle. Okay, have that very, very clear. Next. Now, replacement motor vehicle for the left-hand drive. Again, this is an interesting area. A Kenyan resident returning from a country that operates left-hand drive motor vehicle shall be allowed to import a replacement right-hand drive vehicle from any source. Okay? But there are conditions. The person must be bona fide changing resident, like we said. The person must fulfill all the requirements for importation of personal and household effects by a returning resident. Okay? The returning resident must prove that she owned a left-hand drive vehicle where you are living, where you are, and that you are actually with that vehicle for at least 1 year prior to your return. Okay? The returning resident must provide proof of diaspora, disposal, that left-hand vehicle, you must prove to us you sold it, because here we don't encourage those vehicles here. You sold it, and then as you came, you bought a right-hand vehicle, and you can buy it from any country. But wait a minute, the value, which we refer to as the current retail selling price, must be the same. So, Ambassador Richard, you cannot dispose a Kasarun car, then you saw some Mercedes Benz and you are telling us, this is my replacement. No. The value range must be the same. The range, there's a range. It's quite narrow. We are a bit strict here because we want people to pay taxes. So the range of the vehicle you dispose, the left hand and the right hand, the range must be the same, okay, of the value, okay? And of course, the replacement vehicle must comply with the KEBS, specifically the 8-year rule, okay? Very, very important. So note all this as we have mentioned, the area of the VAT, the area of duty, the area of the levies, as we have explained. Next. Passenger clearance, very quickly. Like I said, I'm just triggering your minds. What you need to declare upon arrival in Kenya: items you purchased and are carrying with you upon return to Kenya. Okay. Items you inherited while abroad. Items you bought in duty-free shops on the ship or on the plane beyond the allowed limits. Repairs or alterations to any items you took abroad and then brought back, even if the repairs or alterations were performed free of charge. Okay. Items you brought home for someone else, including gifts. Items you intend to sell or use in your business, including business merchandise that you took out of the Kenya or on your trip. Okay. Currency above 10,000 US dollar or its equivalent must be declared at customs upon arrival. A limit for taxable goods only applies to goods purchased by the passenger for own use and should not exceed 500 US dollars. Okay. Exemption from taxes is available for passengers as enumerated for returning residents with the same limits and the conditions. So, as much as possible, familiarize yourself with all this information and you make your life easy and also for us. You can imagine if we don't tighten these areas the way this slide is showing. You can put yourself in my shoes. If we don't tighten this way, you can imagine what could be happening. Okay. Next. So that's what I have for customs. I hope I have triggered your mind. And we have a back office team here with me. And any questions you put will be very quickly answered. And any pertinent ones, I will come back and answer. Thank you, moderator, and over to you.
Thank you, Mr. Gadatwa. And we go straight to Domestic Taxes Department. Madam Lena, the floor is yours. Thank you.
Thank you so much. For the Domestic Taxes Department presentation, I will be assisted by my colleague Nixon Omondi. Nixon?
Thank you, Lena. I hope I can be heard. And thanks a lot, our Excellency Ambassadors and the MFA office together with the KRA team. And we also, of course, give thanks a lot for attending this session to our Diaspora fellow Kenyans. So we'll go through the domestic taxes. At least in this session, we're able to know that there are two departments within KRA. Of course, there's another third one, that is where the marketing and communication team comes from. The other departments, maybe with time we'll get to know about the others. So the domestic taxes department do administer a number of taxes. And you'll all appreciate our dear ambassadors that it might be quite long to present on each of the tax heads. So we'll just be doing a summary, high-level summary, and picking out the sticky points for our fellow diasporans to pick out, and then that can then set the stage for questions and also further engagements. So the Domestic Taxes Department do administer the VAT Act, there's the Income Tax Act, there's the Excise Duty Act, there's the Tax Procedures Act, and there are also other smaller acts, including what we do collect on behalf of other government agencies like KEBS, the Sugar Development Levy, and so forth. When you come to the main tax laws that we do administer domestic taxes department, we have direct and indirect taxes. I hope these are words that we've had before. So one of the direct taxes is income tax, and within income tax we find a number of taxes. or sub-taxes, if I can use that word. That is where we get pay as you earn. That is an income tax item, which is usually chargeable on a graduated scale. We used to have a number of scales, and in a bid to simplify the tax system, we currently only have 3 levels to be taxed. And then we have turnover tax. This is a tax for small and micro enterprises. Also trying to simplify the tax regime for them, but it is a corporate tax when you look at it keenly. It is a tax on business. It's only that it is levied on the turnover, because these are businesses who are not able to file their accounts as we know them, calculate their profits, which is then taxable. So for the turnover tax, for the micro and small enterprises, they are simply telling them, this is what you pay, which is 1% on the gross turnover. And the turnover sometimes is equivalent to sales, or some people will call it revenue or even income. And then we have corporate income tax. That is the opposite of turnover tax. This is now payable by the larger entities or those who have not been allowed to be within the turnover tax regime. So for resident entities, we are already getting a word that we'll try to define. I'd already seen a question by Weldon around residency and how it is supposed to be taxed. So for resident companies or corporate bodies, the rate is generally at 30%. Of course, for the diasporans who want to invest in Kenya, there are other preferential regimes where the tax rates are lower than 30%. That we can have that discussion maybe following this. Then for non-resident corporate bodies, if they have physical presence in Kenya, what we call permanent establishment, they are not incorporated in Kenya, they are chargeable at a higher rate of that 7.5%. So if you look at the corporate income tax, we are basically talking about tax on the profits. In tax language, we call it taxable profits. But turnover tax looks at the sales. And then in addition to pay as you earn turnover tax, corp tax, we also have capital gains tax. As we know, there are people who earn income through transferring or selling capital items. They are not in the business, the everyday business of buying and selling those items, but sometimes some of them are purchased for speculative purposes or just for holding them. Some have sentimental value, but at some moment you get to dispose of that property. Then if they fall within the capital gains tax regime, then you get to pay 5% on the gain you have made. These are tax that was there before, suspended somewhere in 1985, and then reintroduced in 2015. Then we have tax on items where you have given somebody a right to enjoy that property. And this is where we have rent. Rent is part of, you've given somebody your house to occupy for a period and you earn rental income. That is also income that is subject to tax. Of course, in addition to rental income, there's also related goodwill. There are people who have properties and in addition to rent, they also charge goodwill. They should also know that that is income chargeable to tax, together with royalties, because in a royalty scenario, you are according somebody a right to enjoy your intellectual property, and that is also subject to tax. And for specifically for rent, we have 2 regimes. If you're not earning a lot from the rental income, if I can use that word, that is your annual rental income is 15 million and below, and it is residential rent. That is the rent where we you and me, for example, pay rent to live in a house, not for commercial purposes. Then you will fall under that regime where you pay 10% of the gross rent received on a monthly basis. But if your rental income is more than 15 million from residential purposes, or you offer commercial residential property, then you will be within the other regime where you calculate 30% on the gross profit, on the taxable profit earned from the rental property. So basically what we are saying is if you have a commercial property you'll be calculating how much rent am I supposed to receive or have received. Then deduct expenditure to earn that rent, and then the balance of that is what is then chargeable to tax at 30% if you are a corporate landlord. But if you are an individual, that's a natural person, a landlord for commercial property or property residential in nature, but what you receive is more than 15 million, you'll be taxable at the graduated rates. Then, of course, we also have a new tax, and I'm happy that His Excellency mentioned this on digitalization, and we know that that is where the economy is gravitating towards. A lot of things are becoming digital in nature, and it's not just services, but even products are incorporating a lot of digital aspects. And Kenya, of course, introduced digital service tax, just effective 1st of January, where anybody who was earning income from services offered through a digital marketplace, or it's an electronic service or an internet-based service, was chargeable to 1.5% on how much they've received on account of offering those services. That was supposed to be payable by everyone, residents and non-residents, but effective July 1st, the residents were then moved out of the digital service tax because they're already also paying corporate income tax, turnover tax, and the other taxes. Now left for non-residents only, and it's still 1.5%. And then apart from the taxes I've mentioned, I think this is just a sample of the taxes under income tax. We have indirect taxes where we have VAT and we have excess duty. VAT is chargeable at a rate of 16%, and excess duty, there are various rates depending on the product in question. If it is a good, there are specific goods and there are rates. If it is a service, we also need to check the kind of service and set the rate applicable to that. And that I can always invite our fellow diasporans to look at the Excess Duty Act of 2015 and also the VAT Act of 2013 so that they are properly guided. So if you are a Kenyan living in diaspora, it is important to know whether you are a resident or you are non-resident, because that has a huge bearing, especially on the direct taxes. How you will be taxed on your employment income, on your business income, on your rental income, on any capital gain, or even on digital service tax. Very important to notice, to note whether you are a resident or a non-resident, and we'll be explaining that shortly. Also important is that Kenya employs a source basis of taxation for direct taxes. We only tax income that has been derived or accrued in Kenya. So there are cases where you earn income from outside the country. That income might not be taxable unless other provisions of the law deems it to have been earned in Kenya. And I think hopefully I'll be addressing the question by Weldon or my senior Lena. So we will address the same question. Can move to the next slide. So as we look at direct taxes, we always have the issue or the challenge of somebody being double taxed. This is a concept in international tax that for trade to thrive, you won't want to tax the same person in two jurisdictions. And this is where double taxation agreements come in. So double taxation agreements assist in avoiding, the same person being double taxed. If an ambassador has earned income in Spain, then the same income, if there's an agreement between Kenya and Spain, should either not be chargeable again in Kenya, or if it is chargeable, it should be a lower rate, or if it is chargeable, then our ambassador should get credit for the taxes paid outside the country. And that is why it's important to note all the agreements in terms of double tax agreements that Kenya has. Currently, there are 16 double tax agreements, not so many. I know in the jurisdictions, ambassadors where you are, there are many agreements. In Kenya, we only have 16 that are operational. But when you visit our Treasury website, you will be able to see the various treaties that are in force, the ones that are being negotiated, the ones that have been signed but not operationalized, the ones that are being considered where we are just making initial contact so that we start the process of negotiating. So for purposes of our discussion this evening, we have a treaty with France signed in 2009, operational from 1st of January 2010. So if there's any income issue of income either derived from Kenya or derived from France by a resident in either of those countries, then it will be addressed through that treaty. And then for Italy, the treaty was signed. Unfortunately, it is not entered into force. I think there are processes that I don't know whether it is the MFA that will guide us and part of our lawyers on why it is not entered into force, but there are also processes that have to be completed before a double tax treaty enters into force. So it is important, as I mentioned, to check on that. Further from the double tax agreement, we know that as a country, we want to export our services, we want to export our goods. But speaking about services, our own law, the Income Tax Act, provides for instances where if our athlete is charged tax in another jurisdiction, if a person who is an entertainer, we call them celebs, have earned income outside Kenya, or an employee has earned income outside Kenya, and the three categories are charged tax in those jurisdictions. Even if there's no treaty, they're allowed to claim the taxes paid in those other jurisdictions as they declare the same income in Kenya. Because given they are residents, the law requires them to declare whether they have entertained and they have earned endorsement fees, they have earned performance fees, or they have earned salaries, for example, for employees. Or our athletes have gone to Spain and there's a Madrid marathon or something like that, and they've earned some income. They are required to come and declare that income in Kenya. But as they do that, if they were charged tax in those other jurisdictions, they're allowed to claim credit for the taxes paid outside the country. And that assists in alleviating double taxation. It's also important to note that when they are charged, we should advise them, even if there are people who are not in diaspora, but most likely they call onto your offices at the embassy, they should keep evidence or proof of having paid the taxes in those jurisdictions. And move to the next slide. I see there are a lot of questions coming very fast and big, and we have an able team that will address the same. We always talk of we want to drive tax compliance, and tax compliance has various facets on how it is supposed to be done. And I mentioned earlier that Kenya operates a source-based taxation. You are chargeable to tax for income that has been used the accounting word accrued or an English word derived from the country. However, there are also a few exemptions that I would have liked to bring to your attention. That there are cases where somebody is employed in Kenya, but they have decided to fund a pension scheme outside the country. That income upon retirement is still deemed to have been earned in Kenya, especially for the period that the person was employed in Kenya. So those are instances that it doesn't look like the income was accrued in Kenya, but the income is still taxable in Kenya because of the deeming provision. There are also instances, and I think this will address partly the question by Weldon, that if you are, for example, in Kenya, you are a Kenyan resident and you are doing business in Kenya, and you've also found a market outside the country, and you do sell outside the country, the law requires you to consolidate the true incomes and tax them in Kenya. It is deemed that the income for sales made outside the country was actually made in Kenya. So if, for example, Nixon is a consultant and he does consultancy in Kenya, and he also provides some consultancy in France, then we deem that the consultancy in France is also derived from Kenya and therefore chargeable to tax in Kenya. If you are a resident and you are staying outside the country, remember you will be chargeable on almost your worldwide income. And if you are selling in Kenya, for example, you are doing consultancy in Kenya, that is still income derived from Kenya and therefore will be chargeable to tax. I think we can move to the next one. So the moment you realize you derived income from Kenya, it's incumbent upon the person to declare the income and pay their fair share of tax. I've used this word, a resident. What does it mean? And in most cases, we confuse the terms residence, citizenship, nationality. Sometimes they are very related, but for tax purposes, we use the term resident. And residency connotes physical presence. So the first line of residency as applicable in law in Kenya is that if you have a permanent home in Kenya and you come to Kenya on Christmas Day only, we deem you to be a Kenyan resident. And therefore, all the tax obligations that apply to residents will apply to you. Even if you go through our airspace, so long as you are in Kenya, as defined in the Continental Shelf Act, we deem you to be a resident for that year, provided you have a permanent home. And as noted in the presentation, that permanent home is a subjective matter. And really, sometimes it's not very easy to determine that somebody has a permanent home. But we use persuasive factors, such as you have a family in Kenya, you have a bank account in Kenya, you have some assets in Kenya. You ensure you come and vote, as I know all our diasporans will vote in the next general election. You are in our election register, the IBC register. All those factors then persuade the fact that you have a permanent home in Kenya. And so if you have a permanent home, you are present in Kenya at any given time, then you become a resident for tax purposes. Then there are people who have no permanent home in Kenya. If those people are physically present in Kenya for at least 183 days in any tax year, and for individuals, our tax year is uniform, January to December. So we look at January to December. If you are present in Kenya for at least 183 days, sometimes we just say 6 months, then you become a resident. Then there are also instances where we look at that year and the previous 2 years and average the 3 years to see whether you are really a resident or not. And we look at an average of 122 days over the 3-year period. So for our diasporans, I think the most important one is the first line, where you have a permanent home and you are present in Kenya. If that happens, then you need to account for taxes as required by law, or where there's a treaty, then the treaty provisions will also applicable. For corporate bodies, it's a bit simpler. For like companies that are incorporated, we simply look at the certificate of incorporation. So if an entity is having a certificate of incorporation, in Kenya we have forms such as CR2, CR8, CR12, then we deem that automatically that entity is a resident for tax purposes. But there are also instances where a corporate body is operating in Kenya, what we call a certificate of compliance. Accountants sometimes call it branch. We call them permanent establishment, provided they have some physical presence in Kenya. They're operating in Kenya, but through a certificate of compliance rather than a certificate of incorporation. And they are the ones who pay tax at 37.5%. We call them permanent establishment, for tax purposes, and it's also an international word. Move to the next, and I think the next must have gone back. Yes, so tax compliance entails 4 things: registration, filing, payment, accurate reporting. So as a person who is filing returns in Kenya, I saw a lot of questions on filing of returns. One, you are earning income that's supposed to be taxed in Kenya, you are obligated to register, obtain a PIN. After obtaining your PIN, you must file a return. Whether that return is a nil return, a return that leads into payment of tax, or it's a return where you are going to have a credit. You're actually allowed to have a return where you have either overpaid tax, or what is supposed to be taxed is a loss. So that is applicable. But as you do that, you need to know when to file at the right time so that you are not chargeable to penalties. Charlie is alluding that my mic is not clear. I don't know if it's him alone or It's applicable to all of us. Madam Margaret, you can guide me if my mic is not behaving properly. Okay, thank you. Maybe
Okay, I have seen feedback that you are audible, so proceed, please.
Thank you. Thank you. And then we are also obligated to pay the correct amount of tax, as our commissioner James Burus, they always say that not a shilling more, not a shilling less. So you must pay your fair share of taxes. And then again, you must accurately report what you are supposed to pay. If you're going to claim any credit for having paid taxes outside the country, it must be authenticated by evidence, and it must be the correct amount that you paid in that other jurisdiction. These processes have been simplified, and that's why we have an iTax system that is accessible so long as there's internet anywhere in the planet. And of course, we also guide our taxpayers. We have a team here that is always ready to facilitate taxpayers to comply. If you have any question, you can always address it to the team. They will guide you. If you have a very technical matter, I'm happy that Madam Lena is here. You can always write to the Policy and Tax Advisory Unit within, so that you are properly guided in law. To the next slide. I know there are a number of people who have had tax challenges in the past. Maybe there's a period you needed to have paid some income tax, you didn't pay. VAT, you didn't pay. Excess duty, somebody didn't pay. I know there are diasporans who have businesses in Kenya, even as they are abroad. And there is an amnesty program that has been brought to the fore. And if you have any tax between 2015 July and 2020 June, this is the program for all of us, where we take advantage of a voluntary disclosure. You disclose the principal tax, and then you get 100% waiver of penalties and interest that come with whatever non-compliance that happened between that period. And the 100% waiver only applies if that happens between now and 31st December. So we were given the first year to claim 100% waiver of penalties and interest. For those who will come between January and December 2022, they'll only get 50%. And those who will wait for the new, maybe to get another, to see another president, if the president, they'll only get 25% the waiver. So this is a classical case of, the earlier you come, the better relief that you'll get in terms of the penalties and interest that have accumulated on the non-compliance that happened between that period. That's why we say the program is available between January and December 2021 and December 2023. And this disclosure program applies to all taxes administered by the Domestic Taxes Department: excise, VAT, capital gains tax, pay-as-you-earn, corporation tax, turnover tax, monthly residential income tax, or the annual rental tax, royalties, holding tax. Everybody is invited to take advantage of this amnesty, and it is also done through the iTax system, fully automated. Next slide. That is all. Lena, you can pick up, and thank you.
Thank you, Nixon. Perhaps, Margaret, you can guide us on the way forward.
Thank you, my colleagues, for that presentation, and for our listeners and participants for being very active on the chat. And now I welcome Max Miller to guide us on a question and answer session.
Your Excellencies, we thank you for being with us, and we thank you, Madam Nduma, for supporting us in this program. We are on to our question and answer, and I will request if our ambassadors have any questions that they would like to put on the floor of the webinar. Ambassador Opembe, do you have any question?
No, certainly. I think my Spanish diaspora will have many questions. I'll give
Thank
them.
you, Ambassador. Thank you, Ambassador. Thank you, Ambassador. Ambassador Yonga, do you have any question?
Of the diasporans to now get clarity, they'd really want to hear about taxation. They've been asking quite a lot about taxation and their investment. Thank you, moderator.
Thank you, Ambassador. I can confirm we are at their service. Anytime they have any questions, let them ask on our social media handles. We are ready to answer them. Madam Duma, your hand is up.
Yes, it is, Margaret. Maximila, sorry. And let me first say that, I tried to apologize or to say that Balozi went to Paris. Ambassador Professor Wakungu was not in, but I think Balozi, you stepped in just when I had just been told that you're not in. So I didn't want just to sign you off. So Pole sana Balozi for that. Yes, Max Miller, I just wanted to hear from you because we get some queries from the diaspora in the EAC region. It's all about harmonization of taxation within the EAC. They would like really to know about it. I know this is not the time for the region, but just for all of us to hear what happens if you're in a one regional, or maybe one rec regional. How far is that, and what should they know, or what should they tell them? What should we tell them when they come back to us? Thank you.
Thank you, Madam Duma. I'll call upon our colleagues from Customs, Mr. Gadatwa.
Director, I will not give you a lot of hope. First of all, I will talk as a professional and also as somebody observing what is happening. And one thing I can tell you, and I know Ambassador Richard, you can support me. Nowhere in the world we have a regional block with harmonized internal taxes. If there is, please tell me. Including European Union, they are still struggling with internal taxes. What they have done and what we actually are pioneered as EAC is external CET. We are very good at that. And one of the reasons why it is so difficult to harmonize the internal taxes, that is excise, VAT, the various levies, is it has a connotation of a political instrument. So any government which comes in place, one of the instruments they look at in how to handle their citizens is about internal taxes and how they deal with that. But external is normally easy to do it. European Union are ahead of us. They actually don't even bother about the CET, the customs duty. They leave it to Brussels headquarters to run their logistics. They are fully on internal taxes. And they are all different. What they have perfected there is if an item is destined to a certain country, it goes there because they have leveraged a lot in technology. We are not also very far from that. We have our ECTS monitoring, and as much as possible, we are ensuring goods reach and are consumed in the partner state where they should be. Lena, you may have an angle from domestic. Thank you, and I submit.
I think I don't think I have much to add from what Mr. Gadato has said. He's come out very clearly. Thank you.
Thank you, colleagues. I'll call upon Ambassador Professor Wahungu. Do you have any questions? Professor, we can't hear you very well. Check your mic kindly. We can't hear you, Prof. probably will let Professor check on her mic settings. Okay, Professor, we'll let you have check on your mic settings. We cannot hear you. I'll go to the chat box, and there is one, Francis, who has asked, how does the law of taxation apply to sportspersons from Kenya who are abroad and want to contribute money either to charity or to family members? Colleagues from Domestic Taxes and Customs, kindly could you answer Francis?
Thank you for that question, Francis. I saw that in the chat. So I am assuming from your question that if you're a sports person, you're living abroad entirely, and your income is earned from the sports activities. So as Nixon has presented, how we tax income, we look at your residency status. So if you're a resident, and residence is measured for an individual if you have a permanent home and you're present in the country for any period of time, and even if it's 1 day in that year of income, or if you meet the number of days that was given in there in the event that you don't have a permanent home, then we will deem your income to be also chargeable in Kenya. But of course, you get a relief for any tax that has been paid abroad. However, if you're not a resident in Kenya at all, that income has been earned abroad, right? So which means you've been taxed abroad. Remember, in Kenya, we operate what we call a source-based taxation. So we tax income that is sourced in Kenya. If you're not a resident in Kenya at all in that year of income, you have earned that income fully in another country, then Kenya will not tax it. So even if you're sending it home, we do not tax remittances because that money has already been taxed wherever you are, and all you're doing is that you're sending money back home. So our tax, again, just to clarify, is based on your residency status. So we first of all have to check, were you a resident in that year of income? And is that income then deemed to be sourced in Kenya and therefore taxable? If it is not, what you remit back home is just a remittance money you're sending to your family or to your friends, and it will not be taxable as a remittance. It is only taxable if it is deemed to be income that has been earned or derived in Kenya.
Thank you, Lena. Professor, we could get back to you. Can you hear us? We can't hear you, Professor. We can see you but not hear you. Probably you may need to check again. Okay.
Can you hear me?
Director Nduma, I can see you. Yes, we can hear you now.
You can hear me?
Yes, we can hear you, Professor. Go ahead.
Okay, thank you very much for the very informative presentations. I don't have any question because I've seen on the chat that my diaspora here has been extremely active. And I think that you have answered most of their questions. So as far as I'm concerned, we're satisfied. And then we will just see what we can do further to engage with you on the social media platforms.
Thank you, Professor. Director Nduma, we can see your hand up. Please go ahead.
Miller, again, they're just the same issues that we do get very randomly, and the issues have to do with the transferability of social benefits, especially for those people within the region, again, because it's a statutory requirement for those people to pay. And then, of course, accessing their benefits when they come home, it's an issue. So I don't know whether that is the issue for KRA or does that fall under labor. There's also the issue that came, I think, from Middle East, if I can recall, and there were issues of donations, and especially on technology. The technology, whether they are laptops, which do go very fast and they become, kind of not obsolete, but they run out of fashion and they want to donate, or medical equipment, and that has been an issue in terms of how do you charge them. They would like to hear more about that so that they benefit maybe from, tax holidays maybe for some sort if they do meet the requirement. Thank you so much, and I'll just put my hand down. Thank you, Maximila.
Thank you, Director. I can't see any more questions in the chat box that have not been answered unless there is anything burning on the floor. I submit back to you, Madam Margaret.
Thank you, Maximila, and Your Excellencies for the feedback. This is just a beginning, and we believe that we'll continue engaging. And colleagues from KRA, we are more than grateful for availing yourself. I would request that our acting Deputy Commissioner, Madam Grace Wandera, is on official duty out of the country, but the acting Deputy Commissioner, Madam Beatrice Mundia, will give a vote of thanks. Thank you.